We have had one hell of a market recently. If we take a look at what's taken place for Bitcoin here, just in a very short space of time, Bitcoin managed to correct down by 14% within the space of just one day. Those of you that are watching us live on this YouTube channel are going to know all about that. We hit 40,000 views and we're nearly at 133,000 subscribers. So if you are enjoying this content, do me a favor and smash those likes up. I'm going to be going through some crazy trade setups with you in this YouTube video, things that I'm looking at. And if you want to take advantage of free capital that you can deploy into the market with these trade setups or with any trade setups you see, there are huge bonuses available to you all with the links in the description. Bybit's going to give you up to 30K in free trading capital. Any profits you generate with that are yours to keep. And BingX allows you to trade the same stuff with no KYC. That means no picture of yourself, no picture of your passport, and you're going to get over $100,000 in bonuses. We're going to come back to that in just a sec, but you can open a new tab and start trading on these exchanges to get these bonuses. They are going to be absolutely huge. But let's take a look at this market. The first key thing that I want to draw your attention to in this market is one of our critical Fibonacci levels, right? And if I go ahead and draw a Fibonacci retracement from our absolute low down to our up to our high for this particular market cycle, we can see that we've got a very important horizontal level right here at the 382 retracement. I'm just going to put this down on the chart with a horizontal line looking at $68,300 for that sideways range here. And this has obviously been one of our most critical levels on the chart for quite some time. We've managed to produce big reversals off this particular price level. We've found really big areas of support. We've continued to get reversals, whether they're small or big. This has definitely been an important level on the market, for the market. And we have now managed to start making our way back up to this area. So this is going to be something I'm going to pay attention to. I'm going to come back to this in just a second, but I also want to talk to you about this sideways trading range that Bitcoin has been in. This has been one of the biggest ideas that we were discussing in that live stream. So like I said, very, very time sensitive content on this YouTube channel. You definitely want to make sure you've got that bell icon checked so you don't miss out on it, because YouTube doesn't always push these out to you guys. So definitely take a look at that if you're interested. But we have managed to stay right in this same, very, very same sideways trading range here, which to me is absolutely huge and a very, very bullish sign here, because we're still consolidating, we're still trading sideways right up at the all-time high, right? We already know the setup where Bitcoin was previously consolidating at its all-time high back in 2020 at the $20,000 price level right before that big breakout, and naturally we've just found another support test here. Now, we have to go a little bit deeper into this particular area of support, right? It isn't all sunshine and rainbows, and the reason for that is if we do zoom in here onto the hourly time frame, one of my favorite ways in particular to actually cover this analysis with you and show you where I think this market could be going is actually looking at the strength of the market when we hit certain areas, right? This can actually tell you a lot about where the market is going, and that's why I'm also looking at the 382 retracement with you guys in just a second here. What we can do from these particular areas on the chart is see how strong the reactions are when we come down to our areas of support. And I want to show that to you right here in this YouTube video as well, because what we had previously, if we zoom in on this first big support bounce that we had since we entered this range, what we had previously here was a really nice correction down to, what was this, let's take a look at this price here. This was the $59,000 price level, and we managed to produce a very nice bounce up within 13 hours. We managed to move up by 14%. So 13 hours later, basically half a day later, the price manages to move up by 14%. That's a very nice, strong, healthy correction. Now, on this occasion here, within a very similar period of time, within actually a little bit longer than that, if we look at about 19 hours, we're only up by 12%. So what we've got here this time is, number one, a slower move up, and number two, a move up which is less intense. We don't move up as much and we take longer to get there, which definitely shows us that the initial reaction off this bounce level was not as strong on this occasion here, 20th of March, as it was on this occasion here, 5th of March. Very, very important. We're going to continue to build on that in just a second. But if we take a look at what's been going on over here, we've got even more of that trend moving in the same direction here. If we take a look at this, about, what is this, 12 hours later, we can go 1 day later, we can even go to the absolute high that we've set so far, which is an entire 36 hours later. We're still only up by 9%. Let me start to tie this all together for you guys right now, and you're already starting to build this picture in your head if you've been subscribed to this channel for some time. you're going to understand here that where previously within about 14 hours, I've stretched this out a little bit longer, but within about 14 hours, we moved up by 14%. Over here, it takes even longer and we move up by less. And over here, it takes even longer still and we move up by even less. And these are very strong signs that the market is showing us that we are not responding with strength to these same areas of support. That is a very, very strong bit of analysis that we can use to show us what's happening between the lines here to really understand what the market is showing us, which in this case is very, very clearly, unequivocally, without a doubt, in my opinion, ladies and gents, showing us that we are getting weaker in this market. And that is going to tie very nicely in with this 382 retracement level here at $68,300, because this is also a critical area of resistance on the chart. If we are producing weaker bounces off these levels and we're now approaching a very important area of resistance, that can be a strong indication of what is to come in this market. So for me, I'm going to be very interested in seeing if the market can overcome this particular price area. If we manage to rise up here and we get rejected here, I'm going to be expecting that we come back down to this area of support. And it's also going to mean that overall, with small exceptions, we are setting a collection of lower highs in the market. And that is going to make me expect an even bigger drop to the downside. Now, I'm not necessarily bearish. You guys know this, right? I'm going with the trend, and I've been telling you guys this much more than anybody else would tell you this, especially while the dump was actually happening. I was reminding you guys that we haven't actually broken the critical support at $60,000, $61,000. And so naturally, I just can't be too bearish about this, right? If we don't break our critical areas of support, how can I be upset about this? We're still ranging sideways. We're still consolidating at the all-time high. This is exactly what you want to see, right? And by the way, there's so much more I'm going to go through with you in this video. I got to touch on the S&P 500. I got to look at Bitcoin's dominance. Got to look at altcoins. If you're excited for all that, make sure you are smashing that like button up, ladies and gents, and also taking advantage of the phenomenal offers linked down below. Bybit is literally going to give you a free $500 position on Bitcoin, which you can go long or short with. Any profits you generate are yours to keep. But if you don't make any money, it does not matter. Check it all out. This is money that these exchanges are giving you, so you don't have to worry about if you win or lose. But if you do make a profit, that is yours to withdraw. Super, super cool stuff there. Now, as we do come back up to this area of resistance here, it's going to be very important to see if we do end up getting that rejection. And like I said, I would be looking at potentially coming back down to this area of support, and also keeping in mind that we have been responding with more increasing weakness every time we've come back down to this area, which, by the way, is exactly what you expect, because we already understand on this YouTube channel that the more you test a particular technical level, typically the weaker it's going to be. Whether it's support or resistance, that level is going to weaken. It's going to hold the market back even less each time, and that's going to be in the form of slower reactions and weaker reactions, right? You move up by less, but you also move up slowly, and again, that's just very, very typical market behavior. You're just getting more comfortable at a particular price level, and that's exactly how you can start to expect to break those price levels as well. So that's going to be something I keep an eye out for. But if we do manage to get a flip on this level and we actually get above this particular price area, well, then there's nothing standing between Bitcoin and the $71,000 price level, and that's going to be the next key target that I'm going to be looking at here. I'm going to be interested in this $71,000 price area on this chart, because that's going to be the next key area of resistance for this market. But it also means that we've broken the most important Fibonacci level on this market, which to me is actually just going to mean that we're going to be rallying up to new all-time highs. That's really what I'm looking at. I mean, we certainly could come back up to this level, find resistance somewhere at the top of this range here, and then continue to trade sideways. And honestly, if we did that, that would be even more healthy for the market. And the reason I'm saying that is if we do cast our minds back to the way Bitcoin was behaving, throughout 2023 summer, for an entire 7-month period, ladies and gents, we were just completely sideways in this range. Look at this, 221 days, just completely sideways within a range stretching about 21%, which was absolutely horrible in the moment, but the breakout from there was absolutely enormous. I mean, from this low to the first real top that the market set, that was a 94% pump to the upside. The price pretty much doubled, and it only took about 4 months. And if we take it all the way up to the all-time high, it only took 6 months for the market to rise up by 193%, which is nearly a 3 times gain. Okay, you put 10K in down there, and you've got 30K coming out on the other side. Absolutely enormous stuff. And it is all coming because we've had these longer term price corrections here where the price trades sideways. So obviously that's exactly what we're in right now. If we zoom in and take a closer look at what happened at the $40,000 price range, it's the exact same setup, ladies and gents, right? We end up moving up very, very nicely into this particular price range, but then it's just sideways, 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 with a deviation up top and a deviation down below, but then continuing sideways, and then bam, we get that massive breakout. And the same thing happening down here in the $50,000 price range. We rise up very nicely into this price range by about 18% from the breakout point, trade sideways, bam, break up. And obviously we are doing the exact same thing right now as well. So if we do manage to get resistance up there, the only thing that means is that we're going to be continuing to hold very nicely up at the all-time high. And we're also going to be doing that right into the halving, because we know now that the halving is only 4 days away. Ladies and gents, mark your calendars, because I'm going to be live streaming through the halving with you all. We're going to be having our popcorn out. We're going to be having whatever we want to keep ourselves happy and satisfied, sitting around like a nice, happy family Bitcoin barbecue for that halving event. So if you want to watch that on this live stream, on this channel for a live stream, make sure that you are subscribed, staying tuned for that. You can also check out my links to my Twitter and Instagram as well in the description below if you're interested in that. But I am going to be live for that, and I'm very excited for it. But if we do move on over to what this chart is showing is, typically one of the things that we were talking about on this channel is those halving sandwiches, right? Where immediately before and after the halving, we're always doing nothing. We don't have any volatility in the market. We're just basically trading sideways, especially on the larger timeframes like the weekly, which we've seen as well already. I mean, we have seen a nice little move down over here on the weekly time frame, but it's been nothing particularly crazy. I mean, we haven't really seen anything crazy happening since basically the end of February or the very beginning of March. And so to me, if we can hold this just for another couple of weeks, that's going to be a very nice bit of consolidation in the market. I don't know if we're going to get it, and it certainly looks like the market is heating up right now, but that is something that I'm going to be paying attention to if it does end up happening, right? So pretty much just range bound right now, which I think is absolutely beautiful. And we've also seen the S&P 500 open. Now, to me, this is really important, and we were actually touching on it a little bit in the live stream that I was covering with you guys before, and I don't want to go too deep into this because it's just not the kind of thing I'm supposed to talk about on YouTube, but we did have the Iran-Israel conflict here, and what we had was something that looked very scary while we were live streaming, where it looked like World War III was starting, and it was just a very polarized event. But what it looks like now is, this is not the kind of thing I typically talk about, but unfortunately right now our jobs as traders does involve global politics, and so I can't ignore this, and that's why I'm bringing it up. I wouldn't do this for no reason. It's just not something that I talk about on the channel. But what we had was Iran basically responding to Israel attacking their base in Damascus. It was a consulate or embassy in Damascus, Syria. Israel attacked that consulate, killed important people for Iran, and Iran has basically just retaliated by striking Israel. And the crazy thing about this is that when Iran sent 400 to 500 missiles toward Israel, barely any of them landed. The only ones that did land, as far as I've seen on the news, haven't even killed anybody. They landed on empty airfields and destroyed one C-130 aircraft, which is like a military aircraft, but nothing, like no real crazy damage. Most of their missiles didn't even land, and Iran comes out and says this was a major success. It was actually better than we expected. Please don't attack us back. That is, I'm paraphrasing obviously, but you can go ahead and read what they've said. This is all like official stuff that these actual countries have been saying. Iran has attacked in a way that they haven't actually caused much damage. And so this was clearly, I think, just a display of strength. Just basically, one guy flexes, so the next guy flexes on the other side, and it's just all a big mess. It's just a ridiculous game. But they've managed to achieve, very little in terms of actual destruction, but still say that the mission is complete. And as long as there's nothing crazy happening from Israel's side now, to me, that means these markets have cooled down. And I think we've already started to see that in the markets as well. We've already seen a buy the dip situation with crypto. We've already seen the S&P 500 here, if we zoom in here onto a very small time frame, gapping up massively, showing us that for this Monday weekly open, granted we have slid down a little bit now, but for this Monday weekly open, things just aren't that bad, right? For me, things would be bad if we gapped down and we were trading significantly lower than where we are now, because that would show very weak investor confidence, and especially that this investor confidence has soured very quickly. But we haven't seen anything crazy happening with the S&P 500. We haven't even seen anything crazy happening with the dollar index. If we take a look at the dollar index right here on TradingView, ladies and gents. By the way, some of you asked me where I get my TradingView charts from. It is all linked in the description down below. You can see that right here on screen below that beautiful like and subscribe button. But if we do go ahead onto the TradingView chart here for the dollar and take a look at what the dollar has been doing, we have seen a nice move up, but nothing crazy happening since the dollar started to trade again, since this market reopened about 24 hours ago, not even, more like 18 hours ago. We've seen basically nothing happen to the dollar as well. So like I said, this is not something I'm interested in talking about in terms of politics, obviously, but it's important to keep in mind that it looks like, at least for now, things have settled down a little bit, and we are definitely seeing that optimism reflected in the crypto market. We've seen big drops down for these coins, but they've also recovered quite nicely. Here's Link from its absolute low, falling down to the $12 area, now already up by 20%. We're going to be coming back to all of these in just a second, because to me, these are the most exciting opportunities in the market. Take a look at this Matic right here at the 72-cent area. Very, very important price range for Matic, in my opinion, and also a potential zone for some SR flips as well, some support resistance flips, because if we go ahead and take a look at this particular sideways range that Matic has found itself in now, this has been a very, very important level for the market for quite some time. We've seen major rejections, major support hits that result in huge pumps, by the way. I mean, off this level, producing an 80% pump within the space of like 45 days or something like that. Absolutely crazy. Big pumps coming off this level. Here's another one, 50% on this occasion here, up by 83% within 50 days. Just huge moves, and we are now back up to these levels, which begs the question, are we in zones of resistance? We're not going to look at that just yet. I'll come back to that in a second. But I think what we've got right now on this chart is a very, very interesting setup, because if we're seeing some, kind of cool, stable price action for things like the S&P 500, for things like the dollar at this stage, to me, that heavily implies that things have settled down for just a minute, and we're sort of back to business as usual. And that, more importantly, we're not necessarily in a black swan event. If we're not in a black swan event, then this is kind of just a buy the dip situation. And that's something I've been talking about for quite a bit. But obviously the big kind of elephant in the room, which makes all of this much more difficult to talk about, is the Bitcoin dominance setup. See, Bitcoin's dominance on the actual event here, while we were live on this channel, was up to 57%. And by the way, every time there's crazy price action, you can depend on me being live on stream with you guys. If I can't be live for whatever reason, you're going to get a video right after it, but I am always right here with you. A lot of people are worried and nervous and stuff like that at times like this in the market. Obviously, I am never worried or nervous. I think the last time I was worried or nervous was probably years and years ago. And I'm going to make sure that you guys can be like that as well with this YouTube channel. So don't worry about it. Anytime there's anything crazy, just come log on to YouTube, check this channel out. You're going to have the voice of reason giving you the most grounded, realistic technical analysis in the game. And what we had during that live stream was a massive move up to the 57% Bitcoin dominance zone. But if we zoom out and take a look at what we're actually dealing with here, ladies and gents, there's still a heavy macro area of resistance here on the Bitcoin dominance chart. And it does line up beautifully with the 60% range. So I still think that there's some more upside to go here for Bitcoin's dominance. And if we do bring this back to the Bitcoin chart itself, I mean, we could easily achieve this just by revisiting this low, or even by collapsing below it to our next area of support. Because one of the key things we understand on this YouTube channel is that if you lose one area of support, it's actually very easy to expect where you might fall down to next. You're just going to fall down to the next area of support. It's very predictable in that way. It's very easy to know what to expect. And it also makes things a lot less scary when you understand that the next area you're going to hit is typically just the next area of support. And if that does end up happening, for me, I've got that area drawn down to about $52,000 at the top of the range, about $50,000 at the very bottom of the range. And so those would be the kind of areas that I'm interested in looking at in particular. If of course we lose that area, then I'm going to be looking at the support at about $44,000. And that also lines up beautifully with a 40% correction. You see, in a bull market, Bitcoin typically only produces at most a 40% correction. And we've seen that extensively throughout 2017. If we go take this chart way back for a trip down memory lane, shout out to those of you that were here way back, during this kind of price action. We were actually making YouTube videos back here in 2018. So shout out to those of you that were here back then. Let me know in the live in the comments if you were here. But what you can see across the board here, ladies and gents, is that these kind of corrections are very typical. I mean, within a bull market here, we've got a 30% correction. From high to low over here, we've got a 33% correction. All right, from here, from high to low, we've got a 40% correction, and we're still in a bull market. We just recover back up from it, and we rally up by 175%. That's a 2.7 times gain. Absolutely huge. Right into another 40% correction. Very, very typical price action for Bitcoin right here, ladies and gents. Here's another 30% correction. We typically see nice, big, chunky corrections in these bull markets, but as long as it's not more than a 40% correction, we're still in the bull market. So for me, and this is going to be a hard idea for a lot of people to accept, but that's exactly why I care about it, because I'm not interested in what's easy for the average 90% of traders, the losers, what they would expect, what they're going to be okay with. I don't care about that. They're obviously not going to get treated well in these markets. But what I do care about is, what are the facts saying? And the facts are saying that this 40% correction lines up beautifully with a phenomenal area on the market where a lot of big things have happened over here as well. If we actually just go ahead and trace this chart backwards to show you guys with a little bit more detail what we're actually dealing with at this particular price range. This particular $44,000 price area has been a crazy point in terms of pivots for the market. I mean, take a look at this right here. Off this particular area, we managed to produce within just 2 weeks a 40% move to the upside over here. On this occasion here, we're finding little bits of support, little bits of resistance coming off this relative price range as well. We're bouncing off this same area within a major correction. We're finding macro resistance right here. We're even getting a fake out, and when that fake out resolves itself, it's a very quick 40% dump within a month, or a much bigger correction down to the absolute low that the market ends up setting. So very clearly an important level on this chart at the $44,000 level, and to me, that is Bitcoin's worst case scenario. So I don't want to be surprised by that if it does end up playing out, and I think a lot of that is going to depend on what Bitcoin does here in the short term. We do appear to be pulling back by just a little bit now, and so that critical support for me is going to be lining up with the bottom of this range. And if we do start revisiting it, and especially if we start showing signs of weakness down here, like not producing a bounce quickly, I am going to be expecting that this is going to roll over, and that's probably going to lead to a lot more blood, a lot more destruction in the altcoin market. We've seen very interesting things happen in the altcoin market, but I think bears especially are just going to be interested in finding resistance at these key levels to potentially trade some short positions here. For example, Solana also trading at an important area of resistance right now, already getting a little bit of a rejection. This could be very interesting to continue to trade it down. I'm not saying that this is something that is a particularly smart idea, but for sure, a lot of people are going to be interested in doing exactly that. I also want to take a quick look at Ethereum against Bitcoin, because it just shows us more of these key characteristics that we're looking out for here, to potentially indicate where things could be going, right? If we take a look at Ethereum against Bitcoin here, we've had this critical area of support at about 0.05 BTC per Ethereum token. We managed to get a really big bounce off this particular price area here from low to high, managing to move up by 70% within about 80 days. On this occasion here, if we look at the same kind of time frame, about 80 days later, we're only up by 20%. And not only that, with all of that weakness, we've actually been able to fall out of this range and now back test it for resistance and then slide even lower. So we're seeing all of these signs now. It's your choice if you want to ignore them, and they could be deviations, they could be fake outs, but I think the chance of this being a fake out is actually quite slim, considering the fact that we've already shown for a very long time that we're not responding to this area with strength. If we've shown this across a long period of time, to me, the chance of this being a fake out is actually a lot slimmer. And I think this is more likely to stick. And again, like I said, this is actually the most formidable part of analysis, is that it is your choice if you choose to ignore these signs. The signs are there. People are going to be paying attention to them, and they may be right, they may be wrong. It's your choice if you pay attention to these signs and heed these warnings. A lot of people won't, and they're going to be correct because this turns out to be a fake out. And a lot of people will pay attention to these warnings, and they're going to be correct because it's actually not going to be a fake out, and it's actually going to play out the way it looks over here. So that's going to be your choice. But you guys know me. I'm not a this time is different guy. Ladies and gents, the amount of fucking times I've heard people say this time is different in the market, I'm just so glad that these are not winning traders that are talking with this kind of attitude right now. It is never different. It never has been. It never fucking will will be. These markets are literally just displays of psychology. And every time people say this time is different, I get more fired up knowing that I know better than that. I'm not interested in dragging my emotions into the game, which is exactly what people are doing. I don't care about your fucking ETF and all these other things that are launching. If the market is looking weak, it's going to pull back regardless of whatever ETF does get launched. But on the note of the ETF, we have actually had that Hong Kong ETF come in. And to me, my take on these things is, first of all, that's absolutely phenomenal. I don't need to talk to you guys about why that buying pressure is going to be huge for the market. It's obviously a very, very good thing. But the other side of this is that it also means that on a more macro stage, on a more long-term fundamental stage for the market, we've got potentially a lot more buying pressure. But these people who are getting in with ETFs, they want cheap Bitcoins just as much as you do, right? If Bitcoin's trading at $64,000, they don't want to buy it at 64K. They want to buy it at 20K. And if they can't get 20K, they're going to take 30. And if they can't get that, they're going to take 44 or 50 or whatever it is. But everybody wants a discount. I don't know why on earth that there is a narrative in this space right now that the ultra wealthy people that are going to be buying Bitcoin through ETFs are going to be completely okay with buying the market when it's at an absolute macro top. It makes absolutely no sense. And if you try to drink that Kool-Aid and if you try to believe all of that hype, you're going to find yourself in a world of trouble, ladies and gents. And that's exactly what we're trying to avoid right here on this YouTube channel. So guys, I don't have much more time in this video. If you have enjoyed it, you know exactly what to do. You've got phenomenal offers linked down below that you've definitely got to take advantage of if you are interested, because you are getting huge amounts of capital for free to trade with. BingX is a phenomenal no KYC alternative to Bybit as well, which is well worth checking out. So definitely do keep that in mind. I'm going to come back at you guys either with a video or live stream later on tonight right here on this YouTube channel. So double check that you are subscribed and you've hit that like button to make sure that you do get notified of all of this content. But with that, ladies and gents, I'm going to be out. Shout out to Carl the Moon. I actually just did a live stream in his office right here. I'm in Carl's office right now. Just finished the live stream. Had to make another video right here. So shout out to that legend. I was just live on his channel. Go check it out if you want to see a little bit more of me. But with that, I'm out, ladies and gents. Thank you all very much, and I'll see you in the next one. Cheers.